We're going on to the next session, ladies and gentlemen, and the next session is going to be one that is focusing on turning opportunities into value retention. This session is going to be moderated by Pamela Natamba, who is a partner at PwC. Pamela is a tax partner at PwC with over 15 years experience in tax consulting and advisory services both in Uganda and the UK. She has provided tax advisory services to a number of multinational clients in a broad range of industries, including oil and gas, banking, telecommunications, insurance, manufacturing, energy, and utilities, and she leads the oil and gas practice at PwC Uganda. She is also a member of the Uganda Chamber of Mines and Petroleum, currently chairing the Tax Committee and previously chaired the Local Content Committee. Pamela, I hand over to you for the next session. Good day.
Thank you so much, Tony. I hope you can hear me loud and clear. Good afternoon, ladies and gentlemen. First, allow me to add my voice to the previous speakers and moderators to thank the Chamber of Mines for organizing this conference at a very timely season where we all need to be thinking about how we want to play in the sector. This session is one that is focusing on how do we turn opportunities into value retention. We have listened to a number of speakers that have shared updates in terms of what's going on in the sector. We have listened to the opportunities that are available to both the Ugandans and non-Ugandans. And really for us, it's to hear from some of the people that are already playing within this space or have played in the oil and gas sector previously to tell us what their experience has been and also to give their thoughts in terms of what we should be thinking about from a player's perspective, but also from insurance perspective, financing perspective. What support do the players or prospecting players in the sector expect, and how can we make sure that ultimately we participate in a manner that retains value for us as Ugandans and beyond. So I have a couple of panelists on my panel today, and I'll start off by introducing two gentlemen. One is Mr. Robert Humphreys, who is the Chief Commercial Officer at Aon Construction Global Broking Center in London. Bob spent 20 years in different overseas locations, including South Africa, Malaysia, Saudi Arabia, and Bahrain. While he was in South Africa, he managed the construction insurance program for the Anglo-American Corporation, and he's since built up considerable expertise in managing major client accounts, particularly in the energy sector. He has acted as a broker for some of the largest construction projects in the Middle East, including $20 billion Sadara complex, which is, I think, the largest petrochemical project built in one phase, and it remains the world's largest project finance deal, and more recently for the new Dangote refinery in Nigeria, which is the world's largest single train refinery. Bob is going to be making a presentation together with Mr. Maurice Amogola. I hope I got that right, who is the CEO of Minet Uganda, Pan-African firm specializing in insurance and risk management plus human capital solutions. Maurice is an associate of the Chartered Insurance Institute of the UK. He's a chartered insurer, as well as an associate of the Chartered Insurance Institute of Uganda. And he's been the past chairman of the Insurance Brokers Association of Uganda, as well as the chairman of the Insurance Institute of Uganda. He has over 30 years experience in insurance. So the two gentlemen this morning are going to be talking to us about how to get the best from the local and international insurance markets on major infrastructure projects. Particularly, they'll be talking about the insurance market and what the owners and contractors need to do to get value out of their insurance arrangements. So without taking much more time, allow me to invite Bob and Maurice to take the floor. Over to you, gentlemen.
Thank you, Pamela. Good afternoon, distinguished guests, ladies and gentlemen. We are very, very glad to have this opportunity to speak to you about value addition from an insurance perspective. Our topic this mid-afternoon is how to get the best from the local and international insurance market. Minet is an insurance consulting and risk management firm. We are operating in the African market in 10 countries in Africa. We have a very, very strong collaboration agreement with Aon, which is one of the biggest global risk management insurance and risk management firm in the world. So we will take you through some of the how to harness the opportunities within the local and international insurance market. If you could roll over, please. Now, there was that very big pie chart showing the opportunities in the oil and gas sector. And this starts from the big leaders like Total, CNOOC. There will be the contractors, there will be the subcontractors, and then there will be other service providers that will partake part of this investment, which is worth 20 billion shillings, out of which every single client or participant has an opportunity also to have their risks managed. As you know, currently, we are grappling with the major risk of the COVID pandemic. And this is a worldwide challenge which we are going through. Now, the way we manage it also reduces the risk for all business groups so that we can do in the normal business of this investment. And one of the other risks that is currently also facing a lot of corporate world is the cyber risk. And cyber risk also challenges, and of course there are quite a lot of losses. And you will find that out of your insurance solutions, equally the issue of cyber liability should be taken care of. So some of these classes, which has been on the right side of this particular slide, can be placed in Uganda. But knowing the nature of oil and gas, and alluding to what Ronnie mentioned, Minet collaborates with Aon to provide you first-class solutions to the risks that you face as we go about developing the oil and gas sector in Uganda. Of course, this requires a very planned approach to be able to secure the terms, and requires us to also appreciate what information, the quality of information, the history of the contractors, subcontractors. These insurances start right from the beginning. Even the farmer who is producing food can also be insured. In Uganda, we now have agriculture insurance. So even the farmer can also get insured so that at the end of the day, the value chain and all the players in the market are taken care of. Let's move on to the next slide. The insurance, of course, market remains tough. There's been a lot of losses internationally, and the market has hardened. So many markets have withdrawn, but some markets keep on are still there, very resilient. And insurers, of course, are always looking at their portfolios, and of course, they would want to make profit. So through the risk management, through the collaboration with your insurance consultant, then we are able to look on your behalf, look at the markets, benchmark for you, and be able to provide for you terms that can resonate with the risk. And of course, competitive terms, noting the volatile nature of the market, and also look out at the reinsurance market to make sure that we are able to give you the best in class terms. Bob, if you can take over from here now.
Thank you, Maurice, and thank you, Pamela, and everybody for organising this event. It's been fascinating so far. Thank you. So thanks, Maurice, for giving us a little bit of background there, and the way we work together as your international partner. As you said, the international or the insurance market generally remains difficult at the moment, and in many cases unpredictable, particularly in areas such as professional indemnity insurance, but also as regards constructional risks, the main classes of insurance that you buy for major projects. So insurers, what's happening with the international reinsurers, which is reflected back through to local markets, they're looking very closely at their portfolios. We are actually seeing some of the insurers moving away from the business. So in order to get the very best terms from the market, you have to differentiate your risk. You've got to get their attention. So the basics, I mean, and I'm sure you're well aware of this, many people on the call, whether you be owners or contractors and so on, depending on who's taking responsibility for insurance. But you need to understand the risks yourself. You're the best placed to understand your risks, to quantify them, to know how you can mitigate them and how you're going to deal with them, understand your own risk appetite and so on. So these can be broadly classified as the physical damage risks to the assets itself, financial, and that may be losses as a result of delay in startup, so business interruption and so on, liquidated damages for contractors, third-party liability exposures, whether that be surrounding properties, pollution, contamination. There's any number of risks that can arise out of this sort of project, especially with pipelines going through different areas and over 2 countries. And of course, your own employees, taking care of them, making sure that they're as safe as they can be, but obviously ensuring any residual risk. And then within the whole process, we understand in these arrangements, there will potentially be lenders. Of course, there will be other stakeholders. And it's important to know right from the start, what will their requirements be so that they can be adequately addressed. And before you go to the market, just work with your advisor. Plan what your desired outcome is. You know, what kind of covers do you require? Make sure that they're broad, they're flexible. You need to have limits. You need to assess the exposures, quantify the exposures, make sure that the sublimits and so on are in line with those exposures. And with projects, what we're seeing all the time these days is that there will always be delays for one reason or another. And so it's kind of inevitable. We all do our best. We have our best ambitions to complete on time, on budget, and so on. But it's quite likely that there will be challenges. And you need to work with markets that you are comfortable that will be around for the long term. Many of these projects are going to go on for many, many years. And you need to build those relationships, which is the key here. So, you know, building relationships with the local insurers and the pools. You heard from Mr. Ronnie Masoka earlier, and it's great that capacity is being built up. Involve them, and we as Aon and Minet have been involved in training sessions in Kampala when we've been able to travel down there. So provide regular project updates. I've been involved in insurance for many years, and I can assure you that building relationships with insurers, rather than sending them a tender or whatever it might be out of the blue, will pay dividends for you. You gain their trust. You gain their interest in the project itself. So work with the local insurers, the local pools, the international markets, because they ultimately will drive the terms and prices, terms and conditions, and so on. And work and do your homework on the insurers and reinsurers who can really add value. Look at their local experience. What have they done in Uganda and Tanzania and in the region and so on. Your advisors can help you benchmark their claims experience, because what you're buying here is a promise to pay in the event of something unforeseen happens in the future, and it could well save the project. So it's important to work with somebody who's going to provide you with the benefits you need. Look for knowledge transfer so that you can build up your own insurance marketplace, whether that be with regard to risk management, and I see some of my colleagues are going to talk a bit more about that later, and technical training. Build all of that up in country. Information is key. The quality of the information is absolutely essential, and it's got to be. We heard from the Honourable Abdurrahim about the openness, transparency, and so on. That's absolutely essential. That can we go back a couple of slides, please? That needs to go into the submission to the market. If there's any gaps in the technical information, because where insurers these days are looking much more closely at the quality of technical information. If there's any gaps, if the insurers can't get the answers, or if they feel something is missing, they will simply price it in effectively and increase the cost of the insurance. So we encourage you to work with your insurers and your brokers. Be transparent, be open, encourage them to be involved in regular surveys. If you're going to carry out tenders to engage with insurers, then make sure you know what your expectations are. Because as I say, the nature of construction insurance is that you are forming long-term relationships with your EPC contractors, subcontractors. And it's the same thing with your insurance companies. You want them to be around in 5 years' time, and you want them to be as keen as you are to succeed with the project and its outcomes. Next slide, please. So, that's it in a nutshell. And I could talk for hours about this, but we encourage you to work with qualified brokers, consultants, and so on that know your business and can add value. But work with brokers that have experience around the world, in the region, that have seen these projects, that have seen the things that can go wrong, that know the lessons learned, and can really help you. And the key to the whole thing, like everything else in life, pretty much, is that planning and partnership are going to be key to differentiating your projects and make sure you get the best deals, both in terms of pricing, terms of cover, and also these long-term relationships that add so much over the period of the project. And that's it, Pamela, from my side, but just a very short overview, and I'll be very happy to take questions at any stage.
All right, thank you, Maurice. Thank you, Bob, for that presentation. And I guess, given the inherent risky nature of the industry, it's very important that everyone that's planning to participate in the sector thinks about insurance ahead of time. And especially in a market where the uptake of insurance is quite low, I guess as Ugandans and other participants, it's important to take note and realize that identifying or anticipating the correct or the right risks ahead of time is going to be critical for the successful participation in the sector. I will encourage participants to post questions in the Q&A text. If time allows at the end, I will put them to you. If it doesn't allow and you're able to log in there and respond to some of the questions as they come through, then that will be great. So thank you so much for those presentations.